Breitbart's John Carney here, and we have the great Charlie Gasparino, Fox Business senior correspondent and author of the terrific book, Go Woke, Go Broke. I went to his WABC radio party. You were terrific that night, by the way. You're really interesting, really terrific. Pardon me, John, we have a Fed meeting tomorrow in the middle of this election and stuff. The world thinks they should, or they will cut their Fed funds target rate, but not by 50, like they did stupidly the last time, but by 25 basis points. I think that's the totally wrong move, and the bond market vigilantes have rebelled against the Fed's easy money. They can't force feed lower rates. The 10-year has gone up almost 100 basis points. Mortgage rates are now over 7% after the Fed. So, please.
They should absolutely not be cutting tomorrow, but they locked themselves into a position. When they did the 50 basis point cut, it would look like a retreat, an admission that it was wrong if they didn't cut. And then, and you and I have been talking about this for months, it would look so political. The cut looked political. If they waited till the day after Trump gets elected and then said, no, now we don't cut anymore, that would be a political outrage. They are going to cut tomorrow, but I think they said the signal that there aren't more cuts coming, or a lot fewer than the market had priced in. The markets realized that, by the way. The market went up a lot today, not because of Fed cuts. Remember, it used to be the market
went up because of growth. Charlie Gasparino,
exactly.
The stock market loves tax cuts and economic growth. And by the way, gold crashed today. That's the new king dollar. Trump is for the dollar as a world's reserve currency. Stock market,
although Bitcoin,
confidence. Bitcoin soars.
That used to be
Trump's the biggest crypto guy in the country.
That used to be a inflation play. It's more of a stock market play now. It's more of a fiscal policy play.
So what do you think?
Well, I think
1,500 points, Charlie.
Here's what I mean. Listen, I love it, but far be it for me to criticize 1,500 points. Larry, you're an economist. You worked at Bear Stearns and many other places. You know bond traders. You know stock traders. They approach their jobs differently. Stock traders like the tax cuts, right? Bond traders are thinking tax cuts and tariffs and maybe inflation. Here's what a smart Trump financial transition person would do, and Howard Lutnick is that person. He would talk about how Trump is going to use tariffs not as an across-the-board sort of weapon, but as something that's a tool to manage trade fairly.
Reciprocity.
Reciprocity.
Right.
Get out there, because the bond market is signaling that we see inflation. We don't like it when you combine tax cuts, not cutting Social Security, on top of, and by the way, I'm not saying I agree with them. I'm just telling you what I know about bond traders, and on top of that, tariffs.
Just say, look, economic growth policies will reduce the budget deficit.
Absolutely.
People need to say that. That's the Laffer curve. Now, your other point, I happen to agree. Howard Lutnick could do it.
J.D. Vance should do it.
Scott Besson can do it, right? He's very well known.
Something Scott actually put out there that I think is really important. He said, not to correct you, but he said gold didn't crash. The dollar weakened.
Yeah.
Right. The right way to look at this, king dollar. Remember, everybody was telling us that Trump's policies would weaken the dollar.
Right.
And that's absolutely been the wrong trend.
Counterinflation.
100%.
By the way,
supply-side tax cuts are counterflationary.
People that hedge the dollar, right, they buy Bitcoin now. It's weird, isn't it? It's like it has become this
How about
thing.
this, Charlie? So, Trump, I tariffed heavily China because of their unfair trading practices, and they are an enemy in national security terms.
Yes.
I tariffed them, but I cut tax rates on the other side. There was no inflation in my first term. Why should there be inflation now? I'm going to have very similar policies.
He's got to say it. I think at some point you got to talk to the markets a little bit. Listen,
I agree.
Trump is elected now. He's president-elect. I think now is where you might get volatility in both the stock and the bond markets, because people are going to try to digest exactly what he's trying to do. By the way, I'm not saying this is bad. This is what markets do. They kind of figure stuff out.
This is growth.
Yeah.
By the way, some of the interest rate rise today was real rates went up, which is pro-growth. That's a growth play. And real rates could drive the real component of the bond market rate There's the inflation component, and then there's the so-called real component. There's in other words, growth component and an inflation.
Right. The tell on this,
nothing
Larry.
wrong with that.
The tell on this that this was a growth expansion in the stock market is what we had been seeing for a long time, for months, was anytime the Fed looked like it was going to get more hawkish, stocks would go down. If it looked like it was going to get less hawkish, stocks would go up. People are deciding that the Fed will be more hawkish, and stocks soared.
But they don't care because we have
that's the growth
expansionary fiscal policy coming. And I think that's... Yes,
I don't
we do.
think so.
No,
We do. Larry, when you cut taxes, I'm not saying it's bad, but you do have... That's expansionary.
It's when you lower marginal tax rates on businesses and individuals, which is what Mr. Trump's going to do, it produces more goods.
We agree with that.
And that is counterinflation.
I agree with you.
Wait, one more point.
The bond market doesn't.
Yeah, they will.
You have to sell it to them.
I'm explaining it. Now, the other thing I want to say is the Elon Musk factor is terribly important. Why is that important? Because Elon, working with Howard Lutnick and others at the transition, are cooking up a $2 trillion spending reduction plan.
Great.
They're also cooking up ways to use federal assets that will bring in, like sale leaseback ideas that will bring in royalty fees, which will bring in revenues to lower the deficit. In other words, I'm saying lower tax rates will be accompanied by huge spending cuts. This is a different policy mix.
Although Larry, the discretionary spending is limited when you take out Social Security and defense and things like that.
But if you take out,
I mean, listen, get rid of the health, get rid of the education department. I would love that.
Well, hold on, right?
I'm there.
Hang on, it's come. There's a lot of stuff coming here, and discretionary part. Look, take the misnamed Inflation Reduction Act, the IRA, John. First of all, it's a waste of money. It's all Green New Deal. It helps China, not the United States. It'll destroy UAW jobs, et cetera, et cetera. It's one of the reasons Trump carried all the blue states. Now, point is, a lot of that stuff has been authorized but not spent.
That's right.
Take the unspent portion out.
You know what? And
Just take it. And there's the CHIPS Act, the Infrastructure Act.
Larry, let me explain. You can take that out, and then if people worry, how are we going to make microchips? Here's how you do it. You say to the banks, we are doing bank regulator reform, and we are going to lower the capital requirements when you invest in energy, when you invest in chips. We can do this through the private sector by deregulating banks, changing the ways.
Which is what he did the first time around.
And cut the tax rate.
Right. We didn't need
so it lowers government spending, but increases the amount the private sector is spending on this. It reprivatizes the economy. That's the recipe.
But that was.
I love that. You should be the OMB director.
That was Trump 16.
Trump won.
Right, that was Trump when you were there, and they did that. And by the way, we did not need the CHIPS Act.
That's right. It was the Intel bailout act. Intel's crashed. It was a waste of money.
But Larry, they're going to have to explain the other side of the economy. This is people.
Wall Street never. Let me say, Wall Street. Goldman Sachs, let's take their economics.
They're necessary evils.
They never understood supply-side Laffer curve economics. They just don't.
They don't.
They just don't. Why? Because they're very liberal, and they believe in liberal Keynesian
Larry,
policy.
look what you're up against.
And they're wrong.
I know they're wrong.
I'm going to whoop them.
That's not my point.
They're running for the hills.
Listen, you ever see that thing in Clockwork Orange where they made the guy watch all this films? And I want to take David Solomon and Larry Fink and the guy from Moody's and have their eyes peeled like this and watch Kudlow all day.
They should get rid of all their
brainwash.
They should get rid of all their economists and just send their clients the Breitbart Business
I was
Digest.
just going to say that. All they have to do is read the Breitbart Business Digest. All they have to do is read Charlie Gasparino in the New York Post and elsewhere, and your book is terrific. And you do a wonderful job at the ABC headquarters. John Carney, Charlie Gasparino, thanks ever so much. All right.